Hi, Niro Pillay here from Investment Rise. Right now it's a festive season, the season of giving. So in this video, I want to give you the gift of capital growth. Now, what do I mean by that? See, I always maintain that the fundamental goal of a property investor should be for investing for capital growth. And although many of us implicitly understand that, what I've found over the last several years of helping people invest in property is that we don't understand the numbers. I mean, how does capital growth actually work? What happens if it grows at 5% or 7% or even 3%? So what I want to do in this video is give you the gift of capital growth to show you what happens when property prices rise. So let's look at a scenario right now where you purchase a property for around about, say, $500,000. So let's go 500. Now, for many of you living in Sydney or Melbourne, you're wondering, well, where do you get something for $500,000? And I agree. But I would say right now, this year, 2016, going to 2017, the market's growing at the fastest right now and expected to keep that superior growth rate for the next 3-4 years, an upswing. You can still get 4-bedroom houses for $500,000. And I mean houses, not apartments, houses. So in fact, even a little bit less than that. So let's look at $500,000 just as in these areas, a slightly higher price point than average, but to begin there. Now, what do you think those prices are going to rise at? Let's look at a worst case scenario to begin with. So say over the next 10 years, what's the long-term average growth rate going to be? Say a worst case scenario. Say it only grows at 3%. Okay? 3% is just inflation right now. And again, this is not going to be growth at every year. Some years going to be higher than that, some years will be less than that. But long-term average growth rate, 3%. What's this property going to be worth after 10 years? Well, I've had to do these numbers in advance, but that property will be worth $671,958 and change. Hold on, let's look at this. 3% growth, capital growth, is not exactly sexy at all. It's not attractive in the least. I wouldn't go there. But even if you did badly and bought a property that only grew at 3%, in 10 years' time, you'd have an extra $171,958 in equity. Now, did you have to work harder for that money? Well, no, you bought the property once and the property did the work for you. So, and the other thing is, could you save $171,958 in 10 years? Some of you could, but most of us couldn't. Life gets in the way. I mean, think about it. Have you saved $171,958 in the last 10 years? So this is where when we look at growth rates, even at 3%, you're ahead. By investing, you're going to be ahead than just saving your money. But let's keep going. Let's imagine now you get 4% capital growth. Well, the property will be worth now $722,122. Okay? Say 5%. It would now be worth $814,447,000. Okay? What about 6%? It's now worth $895,423. And that's just a 6% average growth over 10 years, which means if that's all you got, and you buy in at $500,000, you have made $395,000 in equity in 10 years at 6% growth. And mind you, at 6% growth, I probably wouldn't even look at the area if that's all I expect over the next 10 years. But this is where when you buy property in good capital growth locations where you're going to get that growth because of population movements and infrastructure growth, you're going to do well. You're going to end up with more money in your bank account than if you do nothing. But what happens if we now get onto the figures that I start to look at? So a minimum of 7% capital growth. Well, that means your $500,000 property after 10 years is going to be worth $983,575, which means you'd have made $483,575 in equity. Say you even have to sell that and you've got to pay some capital gains tax, you're still going to walk away with $300,000 plus. Could you save $300,000 in 10 years? And remember, this is money you do the work for once. You bought the property at the start of the 10-year period, and then over 10 years, you don't have to do anything, just sits there. So capital growth is so powerful when you start to understand this. And then 8%, now that's where we start to get really excited. And then after 10 years, that means this $500,000 property is worth $1,079,462 and change. The property value has doubled. This is, mind you, based on you buy one property and you do nothing else. What happens if after a few years you then get some equity gain and you leverage and you go and buy another one? Well, all of a sudden that initial investment to buy the $500,000 property may end up with you having 2 properties worth $1 million after 10 years. That's the leapfrogging strategy, which I will do another video on. But if you get nothing from this, understand that capital growth is king, but you've got to make sure you look at the population movements. You've got to make sure you look at the infrastructure investment. You've got to look at where in the cycle you are, because if you're buying at the top of the cycle, because these are long-term average growth rates. This is not what happens year on year. Some years are more, some years are less. And if you're buying at the top of the market, you're going to go through 3-4 years of pain. Doesn't make a lot of sense to me. But capital growth is king, as long as then you look at when you buy the property, make sure it doesn't cost you any more than a cup of coffee a day to hold. Because if it costs you more than that, it's going to affect your lifestyle, it's going to affect your future borrowing capacity, and it's going to put a handbrake on your ability to create the maximum wealth that you possibly can. I really hope this video has helped. Called The Gift of Capital Growth, the 8th wonder of the world. Let me know what you thought in the comments field below. And if I don't speak to you beforehand, from my family to yours, a very Merry Christmas, all the best for the festive season in the new year. Thank you for watching this video and for all of my other videos. Some of them have got, now one of them's got well over 30,000 views on Facebook. Thank you for all your sharing, your liking, your commenting. I could not be more grateful. So from my family to yours, Merry Christmas. Consider the gift of capital growth for yourself in 2017, and I'll speak to you soon. Bye for now.